I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is September 1st, Friday, 2023. So we had this sort of bearish candle here today. We ended up retracing exactly from when we closed yesterday all the way up. It retraced higher than normal. It came all the way up to the open of the previous day's candle, all right, which is Thursday. And then we sank down, came out to take the liquidity of yesterday's low, and then we bought right back up to the 50%. So as you can see here on the 4-hour here, we opened up, shot consistently through the night of Asia and London, came all the way up into this this kind of pin bar H4 candle, and sealed that up there, and then decided to come all the way down to take out that previous day low, come to the 50% again of this daily imbalance, and then came back up. All right, so I was expecting a little bit lower, but that's okay. So you got to take it as it's coming. Let's go into smaller time frame here. I'll show you the trades as well. You'll see here that we open up, and make sure you watch yesterday's video. Yesterday I did say that we would retrace up and then come down, right? The way they did it was a little bit different. I had the fib already here. So obviously, if you guys know me and the way I trade, we're generally waiting for a 50%, sometimes 61 or deeper, to come back down. But and that's exactly what they did. So you can see here, we'll start with the 5-minute. Opened up here, came right back to test the open, never came below, constantly higher lows. Then we had news today, non-farm payroll, and and yesterday I was expecting non-farm payroll to be also much more bigger than this. But also at the same time, I forgot it was non-farm payroll, but I didn't forget at the same time. But when I made the video yesterday, I kind of I guess didn't mention it. But anyways, price ended up holding support for a while. This is 8:30. Price shot up, had a bull flag here, and then popped up one more time. Fake move, immediate sell, retrace back up. All right, retrace back up deep past the 79, under the 88. All right, and then sold off again, came below, came right to the 50%. I wasn't comfortable holding more than the 50%. And what the funny thing is I was gonna say, you know what, Ron, just hold it down to closing the imbalance, and they never did. And I made a really good decision here again. So it's all about making good decisions here, because if I didn't take the profit, I'll be pissed, obviously. And then after that, remember, when we come to the 50 again here, inside this daily imbalance, we take out that low. So this is actually an opportunity to buy as well. But they were just taking forever in the day, and it was not as a big non-farm payroll as I thought. I was assuming that it would have came, yeah, no problem coming up here. Coming down, I thought it would come a lot more. But anyways, let me show you the trade here. So we start with selling. So here at 8:30, we make this bull flag here, right? And obviously, this is high enough. At this moment of this bull flag, it was at 50%. So I do take this trade first. This trade, from once it pops up here again, I take this trade, take the sell, and then it plays around all the way till 9:30 and then pops up. So I take a loss there, no big deal. Then we get a beautiful 3 drives here. This is what, a 10-second? So here, once we pop up, that's 1 drive there, 2 drives there, 3rd drive. 3rd drive, take the sell, boom, automatically goes in. As soon as the candle touches that bottom and retraces back up, that's good enough for me. When the candle comes down and touches that open and retraces back, I sometimes consider that as it leaving the block itself. And then when it retraces, but when momentum comes, I'll also sometimes just push the button as well. Here, I just pushed the button out of confidence, pretty much. But on a 30-second, it was cleaner. It was more of an up candle, and I'll show you in a moment. And then it pops up, which is the same thing I'm looking for anyway. But 10 seconds, it's just a little bit different, a little faster, right? Obviously. So holding this trade all the way to our target here at it's a -1 standard deviation. So measuring from here to here down, that'll give you 1 standard deviation. I was gonna hold it to a 1.5. And I'm glad I didn't. I made the right decision because I'm telling you, sometimes it's not what you do, it's what you don't do, right? So anyways, when the price sold from here, what is this? Well, I screenshotted this on 1 minute to fit it, but anyways, price shot down, came down, didn't take out that low. All right. And S&P and NAS did take out that low. So this was a crack. That means we were going to go retrace back up. And we're still coming down. Doesn't mean we're not going to come down, but retrace all the way back. Stops here above the 79. And look how silly I am. I'll just give you an example here. Why I don't like holding these trades like this. This is why I like doing the buy, sell, buy thing instead of holding for one big trade. Because when the price came down here, it was about $10,000, right? For example. Okay, so if I would have took this sell, stopped and took this buy, stopped and then took this sell, let me tell you, I would have way more, okay? And I would have been done earlier. I don't even need to sit here and wait for this. And it doesn't mean I need to sit in my office either, but at the same time, I would have had way more than that, by, I don't know, let's just say 11 o'clock, for example, right? But that's why I do the buy, sell, buy thing. So in this case, you could have done a buy, sell, buy, sell, buy. Okay. Say you forget the 930. You don't worry about the 930. It's a sell, buy, sell. Fourth one, buy. Okay. So I flow like this, man. And the reason why I do it, because this thing flows this way. So, I hope that makes sense. Anyways, we get underneath the daily imbalance here, after retracing. Once it breaks through, this is a new fib from here, and I'm dragging it down. I didn't screenshot this because I didn't move the fib and screenshot it. I forgot. I wasn't worried about it. I was concerned about doing this. This is why I don't like to screenshot, because I don't like missing profit, or I don't like whatever. But you'll see here that, anyways, we take the price down all the way here, down to the 50, and then I'm out. Okay. And then the next trade, as you can see, I get out here. All right. I get out and then I take a buy. So I take the buy here, a little bit late of an entry, right? Because I would have generally got in a little bit lower, preferably here or right here. But it just filled me here, just manual, no big deal. And my fiance's actually has the day off today, so we decided to go get lunch and enjoy the day. So that's why I couldn't screenshot the take profit area, but I got the fib. As you can see here, I do have the fib here. So I have the fib here correctly, and then I take this buy from this. See this the high of the daily imbalance. I end up getting out here. I was trying to wait for the 50. But when it hit this and I saw a rejection, I was completely out and done for the day. So, but I knew it would be a nice trade. So, anyways, that being said, as you can see, I'm gonna go on a smaller time frame real quick so I can show you this. And let's go to a 30-second. And this is when I got out. Right here, actually. So we end up tapping, because we're sitting here dancing underneath it. I'm like, yeah, we're going to tap it. So we tapped, and then we get this rejection here, and I was like, yeah, I'm good. Fuck that. So I was done. And that's fine. I mean, and because I expected the risk of possibly coming down here to close it. And it didn't, which is surprising. Very surprising. So anyways, that was the day. And let's see here. As far as dollar goes, that's your big obvious sign of us going up. So what they did is, if you remember yesterday's video, watch it so it makes sense. We had that daily imbalance, and I had a gap here that was highlighted, and when we ran for it, right, and right through it, actually. So when we were peaking down, what is this? Why does this do that? Right here, when we were peaking down at 8:30, 9:30, see that? I think I made the video yesterday was exactly the same, wasn't it? Yeah, right here. See, when we were peaking down here, but still going up, this is the same story. So, and that's why I was expecting a much bigger day, because look how big this shot up. But anyways, they were holding, Dow was a lot slower than everyone else, but we were peaking down here, and we were peaking up, right? And this was solidifying everything. So, and then shot up all the way for the rest of the day. So very, very easy. Now, as far as next week goes, the historical data still shows that we're coming down here. Okay, so we're not bullish yet, unless they start to swing the price up like this. Because if you watched yesterday's video, I do tell you that September is going to be like a big triangle, right? So shoots up, and in the middle of the month comes down, and the end of the month closes in the same spot we opened up in September. So we actually opened up here in September, but we're supposed to dip down first, all right, and then start going up. So I think next week, I think we're going to see Monday, Tuesday, Wednesday. I think we're going to see next week kind of reach down here, and then we'll start to see a transition go in that direction. All right, so I'm still expecting to come lower, seal up this imbalance, and possibly get into somewhere here or even here. I don't know exactly. And then we're going to start going up. So I'm still looking for sells. So, and that's about it. So hope you have a good weekend. You guys take care, and God bless.